Hello, everyone, and welcome to the Trade Ideas Live Trading Room recap for Friday, May the 24th. My name is Barry Anderson, moderator of your trading room. Any questions you may have for me, you can use this email address. This is a link to get into our 100% free trading room. You do not have to be a member to be in our trading room. I open the room every morning at 9 o'clock Eastern Time. That's when I start to share my screen. I get live on the mic at about 9:05. And I go up to 3:30 Mondays to Thursdays and up to 3 o'clock on Fridays. In the email you're getting, you will see a promo code for 20% off. It's our Memorial Day market. Just in case you don't know, the markets are closed on Monday. So this is our Memorial Day promo code. You'll see it there. I think it's MD in capital letters, MD 2019. It'll get you 20% off the first month or the entire year of a Trade Idea subscription. That promo code will last at least until 11:59 p.m. Eastern time. So know the time zone you're in. All right. Well, I took this from Holly today. You know, people ask me a lot, like, why don't you take every Holly trade? One of the things is, first of all, there are certain price ranges that I like to trade from Holly. You know, typically under $20, number one. So if I see something over 20, I just don't even really pay that much attention to it. It's not a hard and fast rule, but that's something that I just sort of learned to do with Holly. The other thing is that I have to take a look at the daily chart to see, okay, what sort of room can there be? So there was the alert at 7:15. Now I didn't get in right at 7:15. I actually took the trade at 7:20, and I took some out at 7:35. But this is the type of trade that I like to see. This has obviously got beaten up yesterday. It got beaten up because it had earnings, and so that's why you see this big down red candle. And obviously today it's trying to come back. I'm not saying it's going to get all the way back up here, but at least you don't have to worry about any chart resistance. A lot of times when I look at the Holly alerts, I may see a lot of this, right at the alert, and so I usually bypass them. So, for me, Holly is a great watch list. I take a look at each alert that that meets my price range criteria. The other thing too is I do want it to have a certain amount of volume. Now this one I have to admit is a little bit light. It's only 290,000 shares, but that is 3.2 times normal for LPG. So, and the spread was good. It wasn't like it was a bad spread. So that's why I took this one. I was able to take, enough shares to make a difference in order to get out some at that's 733. Remains to be seen how much further it goes, but at this point, certainly is a nice Holly alert. The other one that I did not take, in fact, there are some cheaper ones. I wish I had, I don't know, I don't know if I saw this one, I just sort of missed it, but it's the same sort of beautiful looking daily. You can sort of see that, if this could ever recover, it's got a lot of room on the daily. And this is where the alert happened. Right there at 467, and look where it got to. It got all the way up to a little over $5. And so that's a tremendous percentage increase. And that's the other thing. One of the reasons why I like to concentrate on the ones under $20 is because, obviously if they move at all, those are the ones that can give the big percentage moves. I'm looking at, you can see some of these like TXRX. Yeah, it's good, 53.89. And it's down to 53.49. That's 40 cents, but it's not that much in terms of a percentage move. It's about 0.76%. So this is typically why I like to kind of shy away from the more expensive ones, concentrate on the cheaper ones, as long as they have a great looking daily with lots of room on them, and there's volume. Of course, it still has to have volume. Then those are the ones that I concentrate on. Again, I'm not suggesting that's what you have to do, but just sort of showing you how I like to trade Holly. And I took a few other little trades, but really I just wanted to point out the one Holly alert that I did take. And I know what I wanted to show you. I wanted to show you this one, ARWR. Classic example of a red bar ignored. And boy, now I did take this one, but I'm embarrassed to say that I just more or less scalped it in this area. But this is we're always looking for these red bar ignores or green bar ignores. Now for me, this wasn't perfect because I'd like to see more of a trend before that red bar. Now, in case you're wondering what I'm talking about, if you look at that red bar on the 15-minute candle, it's totally engulfed by that previous green. And then if the next bar is green and moves and has a price above, which it would have to, above the high of that red candle, then it becomes a potential buy. Okay, the theory being that you've got an uptrend, a momentary pause in that uptrend, and then the continuation. And brother, did it ever. I mean, look at there was where you could have taken it, 23.19, gets as high as 20, almost $1 from there. Even if right there, I mean, remember, that was a green candle, so it got all the way up there before it started to pull back. So a lot of people in the room did take this one, and unfortunately, I just scalped it in this area, and that was it. But we're always looking for these green bar and red bar ignored. In fact, let me just show you. I use this as an example, and hopefully I can find it quickly. Second here. I should be able to find it fairly quickly. Just give me one more second here. There we are. So this is a classic. This is a classic example. Now, do they all work out this well? Of course not. But you see something like this. So there's your trend. There's your 4 candles in a row. That's what I was saying. The other one, here was the trend there, but it didn't have the 4 candles in a row. It's probably why I wasn't as confident. But I like to see a little more. This is just one candle. So I like to see a little more of a trend. And then look at that red bar, totally engulfed right there. And then that candle. Now nobody knows it's going to do this. But the minute it takes out that high, that is the pattern though that you're looking for. That is a classic red bar ignored on the 15-minute. It works on any time frame. The higher the time frame, arguably the better, especially if the body of the candle is narrow. You don't want to see a big wide body because what you're doing is, if you're going to take something like this, you're having to put your stop either at the low of of that bar, excuse me, which would incorporate the tail, or the low of the body. So more aggressively you're putting at the low of the body. A little more liberal, you're putting it here. Why I say more aggressive? Because your stop is tighter, of course. So you can get stopped out a lot easier than if you put the stop down here. But, of course, your risk reward, if it makes a move like this, is a lot better if you have a tighter stop. So it's up to you what stop you want to use. But that is a great example. And you could, if you're watching this, you could just copy that and paste it on your wall. That is a great example of a red bar ignored. All right, I think I want to shut this down right here, bring back the capture program. So again, if you have any questions for me, you can use this email address. Remember, there's a promo code there for 20% off. It'll be good until Monday evening at least, maybe Tuesday, but to be on the safe side, Monday evening, 11:59 p.m. Eastern Daylight Time. So hope everybody has a great long weekend, and we'll see you in the trading room Tuesday morning. Bye-bye.